Well, hello and welcome to Business Morning Live on Channels Television. It's the final trading week of November, right here in the nation's commercial capital. And last week was quite tough for major markets. We'll see if there's some calm, this week. Well, let's get a review of the local bourse. Now, it was a tough week, as I said before, for the Nigerian equities market as renewed sell pressure wiped off more than 2.09 trillion naira from the Nigerian exchange. The downturn was driven largely by profit-taking and the likes of Dangote Cement, and shed about 10% week on week. That's for the stocks there, the bellwether stocks. All-share index, 143,722. That's to close the week, down 2.24%. A big drop. Volume value deals compared to the previous week, that was lower there, with 2.66 billion traded. Valued at 106.26 billion naira. We see the deals 107,998 lower compared to the previous week. Showing that maybe there's some easing when it comes to profit taking right there. Let's look at other metrics there. We see for the all-share index, definitely that showed a picture of what played out for the whole market. Insurance, that's financial services, the biggest drop last week for the whole week, 7.05%, followed by industrial goods, and that's on the back of the Dangote Cement drop for the week, 4.50%. Banking follows, 3.85%. We see for consumer goods just more mild compared to other indexes that we track, 0.44%. So that was the picture last week. We'll see if there's some kind of reprieve for this trading week, hopefully. Let's go to a quick check now what's playing out with the oil market. Let's get a check on oil. Oil prices continue their downward slide today, extending last week's losses as loss from, we see the progress in the Russia-Ukraine peace talks, that grew stronger. The US dollar, that gained momentum there. But we're seeing that mild drops this morning, $62.55 a barrel. That's for Brent crude, about 2 basis points down. WTI crude, that's staying under that $60 level now for a while now, $58.03. Then we see a 5 basis point drop there for Brent crude. So definitely we're still seeing pressure right there in the oil market. We'll see if that continues. The market remains on edge with traders concerned that a potential peace deal could pave the way for sanctions on Moscow to be eased, a move that may unleash previously restricted Russian crude that's coming back into global supply. So that's a picture right there. We'll bring you more details of what's playing on later on. All right, to other matters now. Our business editor, Enijo Mekwa, had a sit down with Adenike Adeyemi, Executive Director of Faith Foundation, on the sidelines of the organization's latest economic report event. Their conversation, delves into the state of Nigeria's business environment, key insights from the report, and what policymakers and entrepreneurs must do to drive sustainable growth. Take a listen.
I always looked at small businesses at the Faith Institute, and micro, small and medium enterprise businesses have always formed the basis of all our data. But if you look at the data around MSMEs in Nigeria, they make about 90+% of the entrepreneurial activity in Nigeria and most countries around the world. They contribute to about 80% of the jobs, so they're significant contributors to our labor market. And also, they contribute just about 50% of our GDP. And that's actually where the conversation starts, that if you have over 90% of your entrepreneurial activity contributing just barely half of that, it speaks to productivity and it speaks to the efficiency of their output, and it also even speaks to the quality of the jobs that are also available. So this year we decided to take a look and say, okay, how do we make sure that for our small and growing businesses that have high growth potential, to actually not just be small engines. There are different types of engines. There are engines that will power a small shop. Then there are engines that can drive plane. There are engines that can power industry. Those are the type of engines where looking at that. How can we get them to be transformers of Nigeria's economic growth and our industrialization reawakening? And if you look at our reports, from hustle to industry, that really is the way how we're contextualizing the conversation. That yes, we have very good level of entrepreneurial activity, which we want to commend, but we need to look at productivity, we need to look at competitiveness, we need to look at enabling those who have high growth potential to then become the true engines of our industrial growth, our re-emerging, and our ability to really take advantage of all the potential human resource, natural resource potential we have as a country.
Everybody will now agree, of course, everybody now is on the same page to say small businesses are the engine of productivity and all of that in the economy, not just Nigerian economy. And so we've heard of a lot of policies and efforts from government and all of that, but it does seem like getting these efforts to make the desired impact is really difficult.
So how do we find capital? And capital is in different forms. There's funding that can help somebody when you're very small. But there's funding that, for instance, if somebody who is just doing bakery or baking bread then needs to now supplying 1,000 shops across Nigeria, the type of capital that they'll need is very different. So there's that. There is access to markets, right? And that's what a lot of small businesses struggle with. There are logistic issues, there are infrastructural issues, there are people issues. So it is multi-layered effect. One of the conversations we've had today was also that, like you said, that we've had a lot of policies, you know. There was the Nigerian industrialization policy, I think from 2014 to date. And a lot of our economic growth and recovery programs from Vision 2020 up till date, or even before then, really also understands and underpins MSMEs as the driver of that growth. But if you don't move them just beyond small scale, nano, and you're not moving them to be competitive, you're not providing opportunities for those who have high growth potential to plug into larger value chains, for them to be able to have goods and services that are competitive price-wise, but also quality and value, we miss all the opportunities and the potential. And so, yes, we do have policies, but as we also discussed today, it's also the implementation around it. An example is that over the last 2-3 decades, from as long as I've been in the work in the development space, I've seen a lot of policies around MSMEs that talk about the creation, the widespread establishment of industrial park and special trade zones for small businesses. So the policies are there, the thoughts around those things are the initiatives are there. But how do we ensure that all the special trade zones, the industrial parks for SMEs are established, are tested, are run, so that we can also learn from, you know, what is good, what's working with that. We really just have to do that. There's nothing new, to be honest, in terms of what we can do to help SMEs grow. It's just saying, let's make it happen, let's ensure it happens. And that part of government's effectiveness should be in that implementation and learning from it.
So I hear you talking about industrial parks and trade zones and all of that, and the last I checked, requirement to be on those places to get the huge benefits which they promise is really high, and small businesses can hardly get on board.
Yes. So it speaks to the thought behind the policy. And you can imagine that we're a large country, we have a lot of people and we have a lot of businesses. And so even programs like those industrial parks, we have to have quite a number of them. You know, you can't just be 1 or 2 or 3 in Lagos. You have to have quite a lot of them, but that have focus on special industries or value chain that are relevant to improving competition within their location. So that's number one. I think what you also spoke about in terms of standards is a supply and demand issue. It's like capital. There is funding, right? But like, you know, the minister said, some of the funds that are available for MSMEs, even though the funding is there, a lot of SMEs are not also benefiting from that because the requirements, a lot of them cannot meet it. So there's also the path where you develop small businesses to be able to meet the standards and the requirements to then be in those industrial parks. So you have to look at both issues from a supply and demand perspective. And I think maybe the last thing I would also then say is that, the MSME ecosystem is large. There's small business, there are nano businesses, there are micro businesses, so you also need to be able to create the type of enterprise, the type of value chain, the type of location, the type of sector. So you have to look at it in diverse ways, but that's also part of where the value and the beauty of our entrepreneurial landscape comes in. There are people like Faith Foundation, there are people like so many entrepreneurship organizations that are investing, that have supported and continue to provide the capacity required. And what organizations like us want to see is that policy also makes people telling entrepreneurs to improve their standards and capacity to meet certain standards. When they meet those standards, it's easy. The information is not ambiguous. It is clear, it's transparent. They can go anywhere to federal or state institutions and then be able to, take on the policy provisions that can then help them grow.
I think the second or the third person talking about simplifying policies in Nigeria today.
All right, let's dig deeper into the latest reports from the Faith Institute. We have Beyond the Hustle, Awakening. Also, the State of Entrepreneurship in Nigeria report, 2025. Joining us to unpack this, we have Amaka Nwakolo. She's a director at the Faith Institute. She's joining me right here in the studio. Great to have you.
Thank you.
Good morning.
To be here.
And via Zoom, we have Dr. Wilson Rumebos, economist and fellow at Faith Institute. Join me via Zoom. Great to have you on the show, sir. Good morning.
Good to be here.
Fantastic. All right, let's begin with industrialization. And I'll start with you, Dr. Rumebo. Beyond the hustle, Nigeria's an industrial reawakening. We see the data there showing that, from 1990s to about 2023, we've seen a manufacturing share of real GDP. It was over 20% in the early 1990s, according to your data. And looking, forward, it's been dropping. We've seen 8.6%, 2023, 2024, less than 9%, about 8.4%. Specifically, break down the key highlights, from the report for me.
Yes, thank you for having me once again. I think what the data shows is that if you look at Nigeria in terms of how the manufacturing sector has performed, from about 3-4 decades ago, what you'd find is what people would call sort of like a premature deindustrialization, where the share of manufacturing is dropping, but it's dropping at a point where your per capita income has not reached its peak, or is still a bit low. We're still somewhere around $1,000, per capita income. So that's basically what we've seen. And it alludes to the fact that other sectors, particularly the services sector, if you remember in the 2000s, we implemented sort of like a liberalization policy which opened up key sectors like the telecoms, banking, and a couple of other service-related sectors. So what that data just shows is that other sectors in services have grown significantly and even more faster than our manufacturing sector. So if you then go to export, for instance, only about 3% of total goods that we exported in 2024 was manufactured goods. So basically, the long and short story is that Nigeria is not producing enough, both for local consumption and also for export. There are many reasons we can allude to that, but if you then look at our manufacturing sector in terms of the terms of trade, so what do we export and what do we import in terms of manufactured goods? We're still in a trade deficit. We've been in a trade deficit for quite a long time now. So we import more manufactured goods than we export, and the figures is around 24 trillion in deficit. Just this year alone, the first half of this year, we've done about 14 trillion negative. So our import of manufactured goods, the value of import of manufactured goods is higher than the export of manufactured goods by 14 trillion. That's quite a huge number, which also means that we may even surpass what we achieved, about the 25 trillion we achieved last year. So over the years, we've seen that sort of neglect just for lack of a better word, of the manufacturing sector. And if you look at the firm dynamics, you would see that small businesses, the smaller outfits in manufacturing, have been the hardest hit, especially when it comes to all of these policy, foreign exchange problems, or whether it's issues relating to power and all of that. They are the most affected. And then when you look at the structure of the sector, you would see that only 3 subsectors within manufacturing account for about 70% of manufacturing output. So again, we're talking here about cement, food and beverage, and textiles. So again, there's even lack of diversity within manufacturing. Then at the firm level, you would see that most of our manufacturing firms, which I think was really highlighted in the report and is very important, is that many of our firms operate at the subsistence level. 91% is what we estimated. And in terms of employment, about 73% of workers in this sector are self-employed. So we just have this one-man business type manufacturing outfit, which again is not the kind of manufacturing that would move the needle in terms of lifting people out of poverty or moving Nigeria to the next stage of development.
Right. So, technically what you're saying is, we produce stuff, but we're not producing the big stuff, that the likes of maybe China, when it comes to, production of phones and all of those kind of big stuff. So what would you say is stopping us? I spoke with a manufacturer recently, and he talked about the cost of power in China. He said it costs 2x more for electricity in Nigeria, than China.
Yeah.
So it's tough, for our producers to actually compete, But how about the technological side of things? How does all of this play out?
Oh yeah, it's challenging for businesses, especially the nano, micro, small businesses in the sector. For the large firms, the dynamics is a bit different because they have the capital, they have the skill. In some cases, they can hire skilled labor even from abroad to complement some of the shortfalls we have locally. But for the smaller firms, it's difficult because, again, technology is expensive. And if you look at the State of Entrepreneurship Report 2025, when businesses were asked, why don't you adopt technology? Guess one of the top reasons they cited, cost. The cost of acquiring the kind of technology they need, to be able to improve productivity. And so there is still a lot of work to do in terms of training, in terms of access. But what we've seen so far, especially even within the manufacturing sector, is that businesses are using technology to access markets. So we're talking here of social media, being able to trade, to access other markets, even in some cases export to other countries, trying to leverage on social media, which again is a part of technology, WhatsApp and the likes. But more importantly is the fact that when we talk about technology within the sector, or technology in terms of using technology for productivity, I think that's much of where the biggest technology is concerned. And it speaks to a whole lot of a broader issue that I think, the government has to, in a way, step up and intervene to support some of these small firms to be able to acquire that much needed technology that will raise productivity.
Right. And when you talk about support there, when I see the way, governments in China support the manufacturers there, it's quite incredible. And I guess that's why they're able to, compete and, export to the world at this point. All right, let me bring in Maka now. We also have the 2025 State of Entrepreneurship, Index. And there's a paradox there. It looks like the entrepreneurs are kind of like optimistic. This time.
Yes. So thank you, Ladi. I think to delve into that question, I'll provide a bit of a background context. For us to assess entrepreneurial activity across the states in Nigeria, we look at 5 pillars. We look at skills acquisition, we look at business performance, we look at enabling environment, we look at perception of opportunities, which is where optimism comes in, and then we look at technology and innovation. What we found this year is that for the very first time in 5 years, we've been putting out this report just tracking data across the ecosystem, and I'm talking 36 states, including the FCT. What we found was that for the very first time, we saw a slight increase in the index, right? So last year, we were at 0.46, and typically we measure this on a scale between 0 and 1, right? So 0.50, meaning average, right? Now, this year, we're at 0.47. So we're not up to the average, meaning we're not doing fantastically well. However, there's a slight jump, not even a jump, a slight move, I would say, from last year. And so that for us signals that a lot of entrepreneurs are optimistic about the future. If we look at the index and look at the different pillars, you will still find that there are issues. So for example, skills acquisition and enabling environment still rank the bottom or the least on the index. So there's still a lot of problem that we need to consider. And case in point, like Dr. Rumebo was saying, skills, it's when we're talking about technology or talking about businesses growing, skills is a critical part. And if we look at the index, we see that it's ranking low, meaning that, you know, a lot of businesses would rather invest in staying afloat than maybe taking an extra course or something, right? But if we look at technology adoption, we saw a slight move from last year, right? Which again signals that people are maybe adopting technology a little more. But again, when we talk about technology, we find that for a lot of businesses, it's really about social media. How do you adopt social media to maybe access markets? But technology is broader than that. It's saying, how do you deploy, you know, machineries that can improve efficiency in your operations, right? So for us, we still think that there's a whole lot that can be done in terms of...
So it's not just about dancing and selling on social media.
Well, dancing and selling gets the markets, doesn't it? So,
it does.
Yeah, it does, but it's not just about that.
Right.
You're right about that. But then again, in terms of perception of opportunities, which is where this question really hinges on, we saw a slight move. You know, last year was 0.70, this year 0.72, meaning a lot of businesses are optimistic. And, you know, it's easy to see why we can point to certain things in the economy. For example, the harmonization of the foreign exchange windows, because that was a major issue. You know, so we're seeing a bit of improvement in the economy, right? So in a way, I guess that businesses are sort of getting these feelers in the economy, and that's what translated in the survey.
Right, but we're also seeing, even with that optimism, they're not creating that much jobs as they should.
Right. You know, and this is where I would piggyback on what Dr. Rumebo has said, because what we still find in the ecosystem is that you have a lot of businesses operating at the bottom of the pyramid, so operating at the nano, micro level. So case in point, subsistence or survivalist businesses. What we need to see is that we need to see businesses transition at scale from nano to micro to small to medium. Because like Dr. Rumebo was saying, what we find is that you have a lot of businesses at the bottom. You have a few small and medium, and then a couple of large firms, right? And for us to industrialize and really get to the point where our MSMEs are powering the economy and creating the jobs that we need to see that happen at scale. Meaning we cannot see a few businesses survive in Lagos, you know, Abuja, Port Harcourt. No, it has to happen across board. So there needs to be some inclusive approach that is implemented now for us to see that happen.
Right.
So you're right, we're not seeing as many jobs as we should, but again, this all ties to some of the typical issues that exist within the ecosystem that honestly, urgently require attention.
Right, and is there, you know, looking at that, you know, optimism, do you think entrepreneurs are bullish on, you know, hiring maybe later on in 2026 going forward? Do you see them?
Well, the good thing about the State of Entrepreneurship report is that we track data every year. So we'll see what this looks like in the new year. Right now, what we found was that only 4 firms, 1 in every 4 firms, hired just 1 person. So I guess the simplest response to that would be, if things keep up, if we continue to sort of uphold the reforms that are ongoing now, and then also inject some form of support or create frameworks or structure that supports businesses, then we can begin to see these numbers stack up, right? Because at the end of the day, it's really about consistency, right? We can't get results with one-off interventions and programs. It's that we're doing this consistently. You talked about China. I mean, China for me is one story that I find inspiring, especially when I read about their trajectory, how they started in the 1940s to the 1960s. You know, there was a lot of intentionality when it comes to the design of their policies and the implementation, holding their government accountable and ensuring that year on year, you know, those policies are implemented. So of course, it's no surprise that today they are the manufacturing superpower of the world.
No, I get jealous when I get the kind of support, you know, they give to entrepreneurs and manufacturers in the country.
But it's not rocket science, and we can do that here as well. But we need some form of intentional thinking when it comes to our policies and implementation. I think that's the major issue
Implementation.
Here. Backed by implementation.
Right.
And monitoring as well.
Let's bring in Dr. Imubo to this conversation now. You know, we're still talking about industrialization and credit, cost of credit. I know that's another big issue. And the Monetary Policy Committee, they did cut rates at the previous meeting. They're starting the meeting today. Tomorrow we'll get a decision. Consensus is another rate cut. But, you know, looking at where interest rates are, you know, right now, are you optimistic about the industrialization drive, you know, with the cost of credit right now and seeing the direction, you know, it's going?
No, I'm not.
Wow. Yeah.
Yeah, I think that's just a simple way, because there is no economy, I think, that can industrialize with interest rate at 30+%, right? The MPC has started to, you know, slow down or to reduce rates, you know, but still, we're talking, you know, somewhere around 27%. I just got messages whether, you know, what my prediction is, will they cut rate or retain? Because again, we're very clear that the MPC will not raise rates, you know, at the forthcoming meeting. But back to the point on industrialization, it's still really expensive, and that's something, you know, that I think demands urgent attention. And in fact, one thing I also, you know, would say is that countries that are in this dilemma of, you know, raising rates to attract foreign investment, but at the same time, you know, trying to keep investment within the financial sector just so you can avoid, you know, weaker currency or instability in the exchange rate. Countries that fall within that category, what would typically happen is that development finance, you know, comes in to fill that gap that the private sector, you know, cannot fill. And part of why I went straight to no is because just looking at credit to the private sector, only 1% of credit to the private sector in 2024, only 1.2% of total credit to the private sector went to small-scale enterprises. 1.2%, Ladi. This is close to zero. And it tells you some of the factors. And when you ask businesses, if you check through the State of Entrepreneurship report, one of the key reasons is high interest rates. And then there are issues relating to, you know, collateral, strenuous collateral demand, which affects female-led businesses disproportionately, female and youth-led businesses. So we can't industrialize with that kind of environment. Development finance has to come in. Another, you know, sad reason again is when you then look at development finance, right? Just pick BOI, the Bank of Industry, which again is one of the top development finance institutions. Only 15% of their loan portfolio for 2024 went to small businesses, right? Went to medium, small enterprises, right? So, and there's even medium there within that 15%. So if we then remove the medium firms, it means the smaller firms will take much lesser than 15%. So the way we've thought about financing for industrialization has to change going forward. I see industrialization as something that is really crucial. In fact, it's almost paramount to issues relating to security, because if you don't create the jobs, if you don't get people gainfully employed and engaged productively, they will resort to violence, insecurity, and create social disorder. So this is something that has to be at the front burner. And I've always argued that industrialization is something that needs to sit within the presidency because of how urgent and how important it is. And so that's one way to drive the much needed attention to the sector, to the industrial sector, and secondly, to the finance issue. And our approach to solving some of these problems, Ladi, is that we always think about throwing money at problems. When we have a problem, the next thing we announce 100 billion XYZ fund for textiles. That cannot work because, again, you hardly find people that get access to these funds, right? So we're saying there has to be that holistic reform to say, how do we appoint credible people to manage government funds in a way that we're giving them very clear KPIs? This is how much you need to support SMEs. This is the XYZ percentage you need to. And the president sits and follows through on all of that. Because if we don't do that, we'll just keep announcing funds. Just 2 years ago, the president announced a 75 billion naira funds for manufacturers. The question is, where are we with those funds? Who has gotten those funds? So those are key problems that I think demand urgent attention from the presidency, as much as we're paying attention to insecurity, which we have to, of course. Industrialization is something that needs to be given that same attention because it is crucial. Right now, countries are talking about industrial policy across the world. Even countries that believed in free markets, the US, they have the CHIPS Act. Biden, had the CHIPS Act, the Inflation Reduction Act. Trump, of course, with his tariffs. The essence is they've understood that industrialization has to come in. We cannot leave the market. The state has to play that role. Nigeria should do the same, Ladi.
Right. And, still looking at that enterprise structure and the missing middle data, total MSMEs in Nigeria, about almost 40 million, powering daily economic activity. Enterprises at nano, micro level, nearly 97%. Very few transition to small, medium-sized business, according to the data there. So when you talk about that missing middle, help us break that down. And how do you measure closing that gap?
Yeah, interesting, because we just decided to say, what's in manufacturing? Every time everybody talks about the fact that manufacturing is the way forward. But I think, we took an approach that says that's not enough. Let's even x-ray the manufacturing sector in Nigeria and see what's in there. Is it the kind of manufacturing that can lift people out of poverty, as we've seen in China and the likes? So in doing that, what came out very clearly is that the way it's structured, there are just a few firms, a few big firms at the top, and then we have millions of nano, micro, small firms at the bottom. We're talking of millions, and then there's a gap in the middle, which we call the missing middle. That if you study countries that have industrialized, there is always a group of firms within that middle base that can, supply input to some of the large firms and at the same time pull up some of the small firms. And what we've also argued is that the small firms can even grow. If we, Adenike was speaking about earlier, she was speaking about how do we identify the firms with very much potential, high potential firms within that small category and provide them with very targeted support, whether it's finance, skills, technology, just so they can grow and play that missing middle role. Because that's really the base, or I describe it as the connective tissue of industrialization. If you're able to grow that middle base, even with South Korea, if you study South Korea and you see the showballs, some of these large firms, they rely extensively on those middle firms to supply their inputs or to provide other related services to them. But for us, what's currently filling that gap, that missing middle gap, it's imports. So you see that across different products, Nigeria imports so many things that it can produce. Just go to the top firms. You would see how much exposure they have to imported input. That's because there are very few firms that can supply these firms. And this is not just about policy alone, right? It's an opportunity for more businesses to step in across the value chain, across different products. We're talking whether cassava, cocoa, so many products. You will see that there are opportunities within that middle, for that missing middle to be filled. I think that's basically what we've
right.
How we conceptualize it.
All right, definitely a lot to feel there when it comes to that missing middle. But let's bring in Amaka now. I also see in the data there, female-led businesses reporting higher growth rates, despite lower access, to capital, because we always hear, when it comes to startups, the male-led startups seem to get most of the attention, when it comes to funding. But we're seeing female-led businesses actually growing. How's that?
So the data around female-led businesses this year is quite interesting because we actually saw a dip in the number of female-led businesses this year, right?
Okay, so the number of female-led businesses are
dropped, but we had an increase in the number of those that experienced growth this year. So it was an interesting juxtaposition, so to speak. But what we find, though, in terms of growth is that female-led businesses are very agile and quick to adapt technology, and so able to access markets. And so that's one assumption for the growth that we're seeing this year. However, I think that what's a bit concerning for us, just looking at the numbers, is that the number of businesses, female-led businesses, actually dropped, and that again sort of speaks to some of the issues that exist within the ecosystem. The challenges that female-led businesses experience, the top 3 challenges that they cited were access to funding, which you just mentioned. There was energy, and so when you look at these issues, there are issues that exist for everyone, but female-led businesses tend to just experience it, differently. And so for us, again, in terms of just this going forward, is saying, can we begin to look at some of these gaps and intentionally begin to bridge those gaps? Because not only would it empower MSMEs, but it would also, guide us on that path to industrialization, which is what we want to achieve and see.
Right. So, definitely a lot to look at when it comes to funding,
funding, yes.
Female-led businesses.
Yeah, when it comes to also addressing the energy issues.
Do the banks see them as more risky?
Interestingly, I know, because we carried out a different study that actually showed that women are very quick to repay. So when it comes to repayments of their debt, they're very quick, they're on time, much better than the men. Not because I'm a woman, but that's what the data is. But that's what the data is saying. So I don't think that banks necessarily see them as risky. I guess they're just different dynamics here, because one, even the female-led businesses need to be a bit more confident in just going out there to take this funding, because what we find is that the men are more, what's the word now, aggressive a bit.
When it comes to getting the funding.
Yeah, just when it comes to just going out there, even when they're not qualified. Yeah, even when they're not qualified, they will take that step. A woman might be qualified, but she would hold herself back and think, oh no, I still need to get more qualifications. I need to find this, I need to find that before I take that step, So if we unpack that, there's actually a whole lot, just within that topic alone. But when it comes to repayments of debts and loans, women do actually do.
All right, man, that's a challenge for us. We need to pay our loans faster. No, at this point, thank you so much. It was great having this conversation with you. Amaka Nwaukolos is director at the Fate Institute, and we had Dr. Wilson Remebo via Zoom, economist and fellow at Fate Institute. Thank you both for coming on today.
Thank you for having us.
Thank you for having us.
All right, we'll take a break now. We'll also get a check on how small businesses can access capital through the capital market. That's in a moment. Just stay with us. All right, now we're exploring how Nigeria's capital markets can unlock new funding, pathways for SMEs, from private placements to crowdfunding, commercial papers, and even SME-focused boards. We're going to unpack these opportunities, helping us to, navigate how the capital market can help, bridge some of these gaps when it comes to funding. We have Professor Chinedu Onyezugbe, who's director of the UNIZIC Center for Capital Markets, joining me via Zoom. Great to have you on the show, Prof. Good morning.
Good morning. Good morning. Thank you for inviting me.
Thank you for coming, Prof. So, definitely we've been talking a lot about small businesses, getting funds, to these businesses so that they can help us, employ more people and even grow, at some point to become bigger businesses. So looking at the financing gaps, SMEs face now, how do you think the capital market can help, solve this? We've heard about, going to the banks, you can't afford some of those, the cost of credit, when you're trying to get funding from the banks.
I think that's the alternative to financing small and medium enterprises, capital market. There's huge opportunities there in terms of long-term financing through equity and debit instruments. You have the venture capital, the private equity, the crowdfunding you have mentioned, then the equity financing, and others. In fact, that's the alternative, because it's like the banks have already failed us in terms of financing small businesses. So I think capital market provides a better alternative to grow these small businesses, small and medium enterprises.
So what practical, capital market instruments will you say are available right now to small and, medium enterprises?
Okay, you have the long-term financing, the equity and the debt instruments. You have the venture capital, the equity financing. Like in the southeast part of this country, you have a lot of small and medium enterprises listed. They are not listed. So this equity financing provides them opportunity to lead their businesses. Even when the owners are not there, the businesses will outlive them. You have the venture capital and the private equity. This provides a significant capital in high growth potential startup and SMEs. You have the angel investing, where these small and medium enterprises can access these funds. You have the grant funding, which you have already mentioned. You have the debt financing, bonds. They can also raise the capital for their businesses through bonds, alternative listing avenues and other, a lot of them. That's why recently we organized a conference in the south, in Anambra State. We organized a workshop attended at Ziko University, where we assemble the policymakers, the investors, the regulator, which is the Security and Exchange Commission. We connected the small and medium enterprise owners and the investors, the capital market operators, and they gave a good opportunity on how to access this capital market.
Businesses, they think, when it comes to, listing on the capital market or getting funding from the capital market, that is only for big companies. Looking at the companies that are listed on the NGX right now, in your opinion, how true is that?
You have a lot of platforms where the small, medium enterprises can also be listed. That's why we organized the workshop. There are a lot of avenues, and I think the Securities and Exchange Commission, they are partnering with us, and they have a lot of avenues. So there's a possibility that they can also be listed. But the problem we have is that low awareness, especially in this part of the country, the Southeast, where the conference was hosted. You have that low awareness. And we need to create more awareness and let the small and medium enterprise owners know the avenues and other possible platforms where their businesses can be listed.
All right, let's imagine I'm an SME now and I'm trying to, raise funding. I want to head into Nigeria's capital market. What would you say are the basic requirements, for an SME to raise funds, through the capital market?
First of all, you must have that credibility must be there. There's a lot of criteria. You have to have a good accounting system. That's the problem we have with some of the business in this part of the country. They do buying and selling a lot. So that's why the center is poised to educate them and create that awareness. You must have good accounting system. Even though in the last workshop we had, even they have opportunity where we can even engage an accountant for them to make sure they have good accounting practices. And another thing, they must have the credible workforce. They have a good staffing system. When we talk about the human elements, very, very important. We must having an available human element that can man that business. Another thing, good corporate governance structure. We call it organizational structure, business structure. Because if you don't have a good structure of that, you can't access no credible capital market operator can partner with you or can help you access this capital. So these are the basic things we need. We are going to take this workshop to the next level where we educate them on all this, on what they need to have for their businesses to be listed.
All right, can you share some examples, in Nigeria or globally, of some SMEs that have scaled, through capital market funding?
In these southern parts of Nigeria, look at, I remember Kennedy Chuku, which is one of the foremost transformation firms in Nigeria. It's because their companies are not listed. The company is not listed. Look at the GMOs, the Wankos, which I believe is one of the largest brewer in Africa. But today, we can't hear anything about Wanko again. A lot of businesses have failed in this part of the country because I don't know whether they don't have that, or they didn't have that opportunity of listing their company because of because of not having that awareness or not having that platform to do that. That's why I'm surprised, even the leading Innocent is not listed. Innocent is not listed. We have only two companies that are listed in the southeastern part of Nigeria, which is the ABC Transport and then Kutis PLC, which is it's saddening. And I think it's high time we started letting the small businesses, the small and medium enterprises in southeast part of Nigeria to know the huge potentials that are bound in this capital market. And we are poised to do that.
All right, definitely. We'll keep watching and see how all the stakeholders in Nigeria's capital market, help to set it up where small businesses can come in there and actually raise funding. Thank you so much. Professor Chinedu Onizugbe is Director, Unizik Center for Capital Markets. Thank you so much for coming on the show today.
Thank you for having me. Thank you.
All right, we'll take a moment now. When we come back, we'll see what's playing out in the global economy. That's in a moment. Just stay with us. All right, we see it's shaping up to be a consequential week for global markets, beginning with an unprecedented diplomatic rift. The United States has boycotted the G20 meeting, prompting French President Emmanuel Macron to openly question the future of the group itself. In the United States, attention shifts to the Federal Reserve as it enters its blackout period ahead of the December 9th to 10th policy meeting, with no October CPI report, patchy economic data, and deep divisions among Fed officials. Uncertainty around the interest rate path that remains firmly in place. Key economic releases this week includes retail sales. We're looking out for retail sales, PPI inflation, jobless claims, and closely watched beige book. That's in the U.S. Then, across the Atlantic, we see in the UK, the government prepares to release its budget against the backdrop of a widening fiscal gap and fragile growth. Investors will also be watching, the CBI retail sales numbers and Lloyd's business barometer. In Europe, Comments from the ECB President, Christine Lagarde, and the release of the central bank's financial stability report. That will set the tone alongside inflation data and German business sentiment. And globally, markets will react to fresh readings from Argentina, Australia, Brazil, Mexico, Canada, China, and South Korea, covering everything from inflation, GDP, to manufacturing confidence. So quite a week for the global market at this point. Let's look at some top stories today now. You see, the Bank of Korea is expected to maintain its current benchmark interest rate at 2.50% during its upcoming meeting, according to market pricing and analyst forecast. The Bank of America economist, Benson Wu and Ting Him, they've aligned with market expectations, predicting the central bank will keep rates unchanged at the November meeting. This would extend the BOK's holding pattern as it navigates, current economic conditions. Then we see Alibaba Group, their shares jumped today after its revamped consumer AI app, Quen, registered a very strong start in public beta, sparking fresh investor optimism about its push into the generative AI market. The app logged more than 10 million downloads in the week following its relaunch, according to the company's WeChat blog post. Then we see Chinese chip-making stocks. They fell today following a report that the Donald Trump administration was considering allowing NVIDIA to sell an advanced artificial intelligence chip in the country. Semiconductor Manufacturing International Co., that's China's largest chip maker by capacity, slid as much as 7%, while AI chip maker Cambricon Technologies Co. Limited fell as much as 2% before reversing course. So we're seeing that whole AI narrative again, starting off the trading week in the global market. We'll see if the sell-offs continue this week. That's it for the global space. Definitely. Looking at the local bourse now, we're seeing a mild drop there for the all-share index. We'll give you more updates about 1:30 to see how the intraday trade continues. Last week, all 5 consecutive trading days for the local bourse, all down. We'll see if there's some kind of cherry picking this week. But that's it on the show today. Thank you so much for watching. I'll be back again at 1:30 with updates on what's playing out with the markets. Hopefully, we make money this week. I'm Ladi Williams, from me and the team right here at Channels HQ. It's bye for now.